Hey folks, see Rachana Ranade here and I welcome you all to a very important video. Today's video we are going to focus on India-Pakistan war-like situation and its impact on defense as a sector as a whole, right? We are not only going to talk about how the defense spending patterns change when warlike situations happen, but we are also going to understand about few companies which make certain equipments or some things which are related to the war and how could these companies potentially benefit from such a war. We are also going to understand one very important point, that why we should also look into the fundamental analysis of such companies, because during such situations what happens is that on social media you could come across a lot of stock names and people unfortunately blindly rely on such names and invest and ultimately could land in problem. So today's video is extremely important. If you have been following my channel, we have already discussed about impact of war on stock market purely based on technical analysis. But today we are going to focus more on fundamental analysis. But before we move on to the discussion, I would want to tell everyone that we are going to have our first ever Har Ghar Investor in Marathi, because I feel that financial literacy is not only about spreading awareness in a specific language. We have to democratize it so that every person who wants to learn about this should understand about it in their own mother tongue, and that is the reason why we have come up with this Har Ghar Investor event, and that is going to happen in Nashik. So if you are staying in or near Nashik, just remember this date, 1st June 2025 is going to happen at 10:45 a.m. at this location. You can check out the links in the description box and in the pinned comment. As I mentioned, this is my first ever Har Ghar Investor in Marathi, so pretty close to my heart. With that, let's get started with our today's discussion, which is about defense. Now we have to understand how has been the pattern of Indian government's spends on defense. So if you can see, currently it is at 2.3% of GDP. But if I'm talking about other global major countries, or I can say if I'm talking about other advanced economies is what I should say, they are spending around 3 to 5% of the GDPs. So in that case, I can definitely say that our spending is lower than theirs. If we were to match up, or if we were to even go closer to that, our annual growth rate in this sector could be around 7 to 8% over the next 5 years. But this is about what could happen in the future. We first should analyze what has happened in the past. Post any warlike situations, has the defense spend as a percentage of GDP increased or not? And for that we are going to analyze 5 situations, including India-China war 1962, India-Pakistan war 1971, Siachen conflict 1984, India-Pakistan Kargil war 1999 and Mumbai attack 2008, and we are going to understand whether the defense spend as a percentage of GDP typically increased or not after these situations. So first things first, 1962, let us check what happened. So for that, let me take you to this website, which is macrotrends.net. Now if you can see here, 1961 was the year that we were referring to, and here you can see a big spike in 1962 and immediate big spike in 1963, right? From 2.75% defense spending as a percentage of GDP, it went up to directly 4.03%. Now why are we even discussing this? Very simple. If defense spending as a percentage of GDP increases, ideally it means that more orders will be given to defense related companies. If that be so, defense related companies are going to benefit, their top line will increase, ideally their bottom line should also increase. Okay, so we have checked for 1961. Which is the next one? 1971. Now if you see here, 1971, or a year just before that, we were at 3.19%, spiked up to 3.65%, continual spike of 3.72%. The next one is 1984, if I'm not mistaken, yes, which is the Siachen conflict. 1984, you can see here, which was spend was around 3.42%, increased to 3.57%, further increased to 4.11% and 4.23%. So clear cut spike seen. Next was the Kargil war, here you can see 1998 was 2.73, 1999 spiked up to 2.96, similar to 2.95 in the following year, and then remained more or less stable. And ultimately, let's also talk about the 2008 attack, Mumbai attack. So 2008 spend was around 2.63%, followed by 3.13%. Of course, we should not forget the fact that 2008 was also the overall subprime crisis situation. So GDP number had also dropped. So the equation there was a slightly different equation, but all in all, I hope you can understand the fact that post such situations, obviously government spends more on defense, and that is the reason why we have seen a spike. Now, if that has happened in the past, ideally the same thing could repeat right now in 2025, and that is the reason why we are going to understand and analyze how all defense stocks could perform and what are their product portfolios to kickstart with. So first things first, we are going to understand about the product portfolio of HAL. Everyone knows about this. They are very famous for Tejas aircrafts. I've also given some images. Prachanda helicopters, all these are fighter jets or fighter helicopters. We can see Dhruv advanced light helicopter. Sukhoi, if I'm not mistaken, their first ever order for Sukhoi aeroplanes is going to be delivered in 2027. So again, an important one. I hope all in all you have understood that if the product portfolio is strong, there is a chance with the current war-like situation, they could get more orders could convert into more revenue. Now let's understand about one more company, which is BDL, Bharat Dynamics Limited. Now what does this company manufacture? They manufacture missiles, underwater weapons. And here you can see again an image of a missile. I'm sure you might have seen such images even on televisions these days. So missiles are of course an important part of war, and this is what BDL, that is Bharat Dynamics Limited, manufactures. They also manufacture something like anti-tank guided missiles. So you can imagine something like this, that if the enemy is going to do some sort of notorious act, if they are going to attack through tanks, let us say, we can shoot a missile, anti-tank missile, and we can hit the target very precisely. So that is also what this company manufactures. And also they manufacture torpedoes and countermeasures. So torpedoes ke liye, I'm sure you might have watched this movie which was called as the Ghazi attack, and in that we have seen torpedoes which were fired during one of the previous wars between India and Pakistan. Let's also move on to one more company, which is BEL, Bharat Electronics Limited. They manufacture radars and electronic warfare systems which are very vital for modern warfare. They also manufacture something like jamming solutions. So let's say they want to jam the communications of the enemy. That is also what they manufacture in this company, which is BEL. Just to give you a small example of this, this is like a battlefield surveillance radar, BFSR. This is for surveillance as well as target acquisition. Now you can imagine, for surveillance, we could have a manned surveillance or an unmanned surveillance. This is an example of an unmanned surveillance. Basically, machines would do the surveillance for us. One more company which is again in focus, which is Mazgaon Dock Shipbuilders Limited, because this war is not only about either the Air Force or the Army. It's ideally a combined effort, Army, Navy, Air Force. And if I'm talking about the war through waterways, in that case, Mazgaon Dock company could also come into focus. They have been playing a vital role in building warships. This is an example of destroyers, or this is a image of frigates. They also are into submarines. So all in all, this company again is important from an angle of war being advanced through waterways. Coming to one more company, which is Zen Technologies. This is into counter drone solutions. So I'm sure you might have seen again footages on televisions that if Pakistan is trying to attack us through drones, we have actually neutralized, we have intercepted their drones in the air itself, so no damage was done on ground. So all in all, you can see that Zen Technologies is a company which could be again very, very important. I mean, not a company per se, but the products that they are making, counter drone solutions, these solutions, these products could be very important in the current warfare. You can see this is just an example. I've taken this image from their website. This is an example of an anti-drone solution. I've talked about 5 comparatively known companies. Let's also understand about one small cap, which is Idea Forge Technologies Limited. They are one of India's leading manufacturers for drones and drones for defense as well. So, what happens is that typically investors, when they hear about small caps, drones, they get really excited. Achha, drones, they are also going into defense. Okay, how do they look like? So you can see here civil drones, they have dual use, defense. These are just images that I'm showing, again taken from the sources which is belonging to their website directly. Now you can see here, if I'm talking about entire financial year 2025 revenue mix, 59% of their revenue comes from defense portfolio and 41% from civil. Now people may jump into this directly. I'm just going to give you an example that what are the basic things that you should check before jumping into any company. Top line, gross profit, operating profit, bottom line, that is net profit. You have to check that. Otherwise, you could end up into a trouble few days later few days after you start investing in that company, right? So just to give you a glimpse, this looks good till now, but if I were to check their latest quarterly results, have a look at this. I'm just talking about YOY, I'm not talking about QOQ. YOY revenue, look at the drop in their revenue from 1023 millions to 203 millions. Gross profit drop from 440 millions to 73 millions. EBITDA from 202 millions positive to 174 negative. PAT 103 positive to 257 negative. Revenue mix, oh my god, now 96% civil orders and only 4% defense orders, and even their order book position has dropped. Why did I talk about all these things? Reason is simple, reason is same. The point that I'm trying to tell you is that just because this is a theme about defense, just because current we have a war-like situation, people jump into some companies without understanding their financials, without analyzing them carefully. So what we have to do as an informed investor, first study the macros. Currently, like we checked, we went from a top to bottom approach. Top, we said, okay, India is spending comparatively less on defense as compared to other countries. Then we said, okay, let's understand some situations, war-like situations. What has happened in the past? Has the spending spiked? Yes, that was our conclusion. Ideally, that could happen in the current situation as well. If spending increases, then which companies could benefit? That is the reason when we talked about what are the product portfolios, be it HAL, be it BDL, be it BEL, Zen Technologies. We talked about multiple companies, and then we said just because their product portfolio is good doesn't mean that you have to blindly invest. At least check basics like top line growth, gross profit, EBITDA, net profit, all these things, order book, and that is what you have to check, and then only decide whether you want to invest in such a company or not. This was again just a reminder, this was a shoot and release video, so just in case if I have fumbled upon something, just in case if I have said some wrong figures, facts, please don't forget to check out the pinned comment and the description box. I hope you found a lot of value in today's video. If you did, don't forget to smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.